Good morning and welcome to Morning Markets. It's Thursday the 14th of December. Today we're going to be talking about the latest interest rate decision from the US and why the markets responded so positively. In yesterday's morning markets, we heard from Kevin, who discussed the latest US inflation report, which was released earlier this week. The data highlighting that inflation continues to trend lower. If you remember at the start of this year, inflation was at 6.5%. We're now down at 3.1%. So very much getting closer to that target of 2% that the Federal Reserve, the US Central Bank, sets. That sets us up well for the latest Federal Reserve meeting last night, as they decided what the appropriate level of interest rates would be, but also what their expectations were for economic growth and inflation looking in the over the next couple of years. What was the decision? The decision was to leave interest rates unchanged at a range of 5.25% to 5.5%. So that's the third consecutive meeting of making no changes to interest rates. And that was on the premise that economic growth is slowing. They're seeing evidence of moderation and also moderation in the inflation front. Did highlight that they could tighten monetary policy further if necessary, but that wasn't the case based on the evidence right now. In addition to their statement and the Q&A session, they released what is called the Summary of Economic Projections. So this is their estimates for economic growth, unemployment, inflation and interest rates looking out over the next 3 to 4 years. What are the details from an economic growth perspective? Well, this year growth has been far stronger than they initially expected, so revised up this year's forecast from 2.1% to 2.5%, but next year slightly moderating their growth number from 1.5% to 1.4%. In terms of inflation, looking at core inflation, stripping out energy and food, they revised down their inflation numbers for this year, next year and the year after. And then in terms of what that meant for interest rates, coming into the meeting, the market had expected interest rates next year to be cut by 4 times. So that's lowering interest rates by 4 times by 0.25% each time. The Federal Reserve had been expecting 2 cuts next year. They raised that to 3 interest rate cuts. So very much coming closer to what the market has been expecting. So the financial markets responded very well to this, given interest rates would, the confirmation that interest rates would be coming down next year. So we saw the US market up 1.4%. Asia markets also performed well overnight. We saw good returns within US government bonds, gold as well, and we saw a little bit of weakness in the US dollar, which we would expect to come through. So that's very good returns for multi-asset portfolios, and that should come through when you log on to your accounts. In terms of today, it's the turn of the Bank of England and the European Central Bank to announce their appropriate level of interest rates and their expectations of growth and inflation. So we'll keep you up to date through morning markets. That's everything from us today. Thank you for watching, and we'll see you tomorrow.